Yo, what's up? Give it a few more minutes, then I'll get it started. Damn, it's like a lot of there's a lot of Japan data. That's all that blinking is going on. How was your guys' trading session? It was profitable. Yeah, I was kind of surprised not to see the US 30 then push higher from Trump's comments. But yeah, we're going to talk about that too. All right. I want to give it like another 2 minutes. All right. So just speaking of equities, what's going on, Flex? Flex. So speaking on equities, we're gonna start off here. Pretty much equities did end in the green today, but overall, when I'll show you guys price action afterwards, still mixed markets, right? We really didn't get a clear bias. And so far for the past 2 days, equities has been pretty much staying range bound, right? And we had a mixture of situations that happened today between inflation data, right? Because that's what's going to be the main discussion for today is how did inflation go this week and what could we expect moving forward, right? But as of now, we also had Trump's comments coming out talking about actually taking initiative trying to fire Jerome Powell, which was pretty interesting. Markets just reacted to those headlines right off the bat, even though like we all kind of know it's really nothing that he could do about it, right? Is I don't we personally know there's no way that he could fire this man from his office. Like even if he has the whole entire White House just not liking how Jerome Powell is conducting monetary policy, central banks and and government officials, two separate entities, and they can't go against each other. It could cause massive market instability, and this is what we did saw with equity markets did take a tumble when those headlines came out. But just to give you guys an idea, for those that just like to focus on U.S. equities, right? So what's impacting equities? So overall, equities has been bullish because the Feds they're not hiking rates. I put this here probably in the beginning of the year, but eventually they will start leaning towards a cutting cycle, right? Because they're not going to hike rates. There's not enough higher inflation data to suggest that the Fed's next step is going to be a rate hike. So the next step eventually will be a cut. It's just when, right? So that's one of the reasons why overall equities has been bullish pretty much since after April. And then we see that U.S. growth is still strong. And growth data, for you guys that really don't know what it is, it's going to be GDP data, PMI, and also labor data is strong, which is jobs. We've been seeing pretty good numbers, like last week's NFP numbers actually came out higher than expected, which is a really big surprise to the majority of the markets. And then war tensions and trade wars has been de-escalating, right? We're not really seeing the conflict on tariffs how it was in the beginning of the year. And when Jerome Powell was actually coming out with his comments, he kind of gave us expectations that the uncertainty revolving around tariffs is not really there no more. After April, we pretty much saw those those uncertainty of tariffs pretty much diminish from the markets. And I'll give you guys an example on why. This is how they could definitely focus on the stock market, because right down here is April, right? We've been seeing since the beginning of the year, February, we've been seeing stock markets was dropping. And then on April, we've been seeing that the stock markets now is hitting all-time highs. So this is why he was saying after April, we've been seeing that the uncertainties of tariffs pretty much is leaving the markets, right? So it's pretty good to listen to those testimonies, man. It could definitely help. But now, if you want to look for fundamental reasons to take sells on equities, right? That would be if we get some sort of recessionary fears. That would most likely come in if we get very bad growth data, right? So GDP, PMI, labor comes in extremely bad consecutively. That would be a sign for looking for sells in equities, right? If we see that the Feds actually start shifting towards a hawkish overall stance, if we see inflation is rising and then eventually they somehow give expectations of a hike, that will be something that would cause equities to go bearish as well. Like I was saying earlier, weaker growth, war tensions escalating. It's been pretty quiet lately, but if the U.S. shows involvement, that's what's going to be the main focus. All right, guys, not just because even today we had some headlines that came out with Iran and Israel. I think it was Iran and Syria, if I'm not mistaken. But the markets is not reacting to it. Like if Russia and Ukraine starts, markets is not given that much of a focus. But what really matters is if the U.S. shows involvement. That's what we're going to pay attention to, okay? And trade wars, right? If we see the trade wars escalating, but it's not just like any random country. It's typically just remember these. It's going to be China, Japan, Canada, and Europe is pretty much the top four main focuses between what's going on with tariffs. Okay, so that's what we're going to focus on if tariffs escalate. So far, they're pretty much de-escalating, right? So this is why we've been seeing such really good market, price action overall. Just to give you guys a snapshot of economic data for this week regarding inflation, right? And then the bottom is UK inflation. So this is the topic, right? We've been waiting for this week because at the end of the month, we're going to have the actual rate decision. And this inflation print is pretty much dictating what the Fed's next step is going to be. And it's extremely important, right? Because in one hand, we got Trump that wants Jerome Powell to cut rates immediately. He wants them down to 1%. And the other hand, we have Powell, right, saying that this is not the right time. We got to wait until we see how the effects of tariffs impacts the economy. They're expecting tariffs to actually start impacting inflation for the next 2 months. They're expecting a spike in inflation, and they don't want to be in a situation where they're cutting rates because he wants it to help his political stance, right? Because obviously, if he cuts rates, it definitely will help trade, right? So that he has a reason for it, but the Fed, the central banks, right, their focus is market stability, right? They want to make sure that they're taming inflation, and he's not going to want to cut rates with uncertainty coming across. And what makes it worse is because CPI that we had yesterday did come out higher than expected, right? And that was, I didn't want to see that. I wanted to take advantage of weakness. That would have been an easy opportunity, right? But with this print, it just increases the odds for the Feds to just stay restrictive. It's not showing, especially this year, we're just not showing that massive decline in inflation trend that will allow the Feds to say, you know what, it doesn't matter what happens, we're going to eventually start cutting rates. Data is not suggesting that at the moment. So this is why markets started adjusting, their stance. And then they started adjusting their stance. I was reading something. And this is why markets are now almost 100% priced in for this month to just be a pause because of what happened with CPI. And one of the things that you could focus on, right? I think I showed y'all guys in the last Zoom call that we did. But as you can just see here, right here in March, April, and then May, right? And now June, we just seeing that prices pushing up. And then now with July, it just shows that uptick in inflation pushing higher. And this is not what the Feds want to see is right here in this bottom. They want to see the trend of inflation pushing lower. But this year, it's not really showing that. As you can just see, just definitely see that uptick in inflation. So this is the problem, right? And this is why the markets is expecting that dovish pause, right? So that hawkish pause. So this is why we overall getting that reaction, all right? Just to give you guys a clear shot on what they actually focus on, And then today we had PPI, which did come out lower than expected, but this is not hard data. Yesterday's data was the hard data. This is mid data. Like the Fed's focus on it, and yes, all the numbers did come out lower than expected, but it's not a coincidence why, not talking about dollar right now, but not talking about this big drop because this happened when Trump said he was going to fire Powell. But with the data that came out, we saw dollar started gaining strength, and then we saw it started breaking above that resistance. This was because, even though that PPI came out lower than expected, that's not changing the stance of money markets, right? They're still saying hey, NFP came out higher. Yesterday, CPI print is higher. Even if PPI is lower, it doesn't change the bigger picture. So even though that PPI did come in lower, and yes, even with data comes out, we should be looking to take advantage of a weaker dollar. But the bigger picture is, what is the Fed's going to do next? And ideally, what the Feds is going to do next is a higher probability that they're most likely going to pause rates, right? So it gives us an overall bias. And one of the things that you can look at, it's called the CME report, right? So this was today, but let me see. I put it yesterday. So yesterday, as you can just see right here, that they were 97% priced in for a pause. Sorry, 97% priced in for a pause. No change. And this is what happened yesterday, right? Today, obviously, 95%. You guys know why? Do you guys know why it dropped to 95% today? If you guys was actually focusing, because remember, yesterday was 97. So why did money markets push lower to 95%? And let me try to check if, see if we get an updated one too. And yeah, I'll go over GBP as well. Uh, CME. What are the odds? Right back. Yeah, so this is updated. So right back to 97.4. So what happened was that earlier today, I'll just show you guys here. Donald Trump, when he came out and says that he was looking to fire Jerome Powell, that he was actually taking the initial steps to fire Jerome Powell, right? He was meeting with the lawmakers, seeing if this was possible. This came from CBS. Like when we get headlines like this, it's very hard to believe if it's real news or not, right? It's best if it comes from Donald Trump himself, right? Just because of what happened afterwards. But when he initiated that comment, this is where we saw that the traders started pricing in a 50% chance of September. Obviously, this was September for a cut. But this is when also we got expectations was coming down for a cut too. I don't know why they did that from that headline, but it kind of makes it just makes it easier for us, obviously, but it causes the problem to the markets overall, money markets, right? Because if you're trying to fire a chairperson and they have a strict stance and you're mad at that chairperson because of the stance that he's currently in, and you're saying that, yeah, we're going to fire you because of what you've been doing so far, it is obvious if they want to pick somebody else, they're just going to do the exact opposite. So when that headline came out about Trump wanting to fire him, this is why we saw a weakness in the dollar, right? That's why we had this big drop in the dollar, because that just signals that, okay, if you're working on firing him, and what if it does happen, then y'all going to be looking to cut rates. So the markets is forward looking. They're not going to be waiting until the rate cuts actually happen. They're going to take advantage of it now, right? If that was the case. But obviously, dealing with news headlines and how news has been with Trump ever since he came in office, right after that, he says that he was not planning on firing him. And then we just saw the actual recovery in dollar did come in place, but not as much. But it kind of put the markets at a standstill, so that was, it kind of ruined a lot of the excitement for today. But not also that, it also helped gold, right? Gold ended up being a really good buy because what happens is we got the weaker dollar and the weaker yields, and that spikes gold higher, and plus the uncertainty. Right? Because one of the things I was focusing on too was equities, right? Because equities, I was personally expecting to see the stock market, which rise up, and it did afterwards, obviously. I was expecting it to push higher, which you could just see this nice area of support being held by NASDAQ, but these wicks was because of those headlines. But firing Powell would create, exactly, it would cause massive uncertainty. So that was one of the reasons why not just I need to change this, but we started seeing global markets actually taking a hit to the downside. Where is that? Euro 50. So global markets was taking a hit to the downside, right? Because it just not just impacts the Federal Reserve. It don't just impact the U.S. stock market. This impacts all the central banks, right? Because they're supposed to be a separate entity. They're not supposed to be dealing with politics. Every decision that they have to make sure that the political aspect has nothing to do with it. Like how would the markets react if they actually find a way for Jerome Powell to actually get fired? This would just set the ball for all the central banks to eventually figure out and do the same shit. And that will definitely cause so much instability in the markets. And guess what? The stock market doesn't like uncertainty. So that's the reason why we saw that drop, right? Even though that I was personally expecting a rise out of that, because if you're going to try to replace him with a dovish speaker, that should support the stock market to rise. But it already, if we just look back, price action, stocks has already been rising this whole time, right? But this this is what caused uncertainty. So if this ever happens again, just remember what happened today, right? Because the markets is going to react the same way if they try to bring this shit up again. All right. Yeah, you got the UJ sales. Yeah, good job. Now, just I'm going to go over the UK because we also had UK CPI. And what I like about the United Kingdom, the problem is what we're going to have tomorrow, London, is UK labor data. So we had a higher print of inflation, but now the concern, we didn't really see the reactions as much. I think like pound Swiss gave really good upside, but the dollar, like pound dollar, didn't do much because of the reaction of the dollar. But we're heading towards tomorrow's UK's labor data, right? Which is going to be important because the issue is going to be, are we going to see a stagflation reaction, right? Higher inflation, weaker growth, right? Weaker labor data. So if we see a stagflation reaction, which I believe this happened like 2 years ago, this is what's going to cause a lot of weakness in the pound currency. It's going to really mess up what the UK has been trying to accomplish, right? Because of bad policies, right? When it, what's that person's name? Reese, the chancellor, Reese. Like they've just been doing bad policy decisions, right? When it comes to physical policy, they've just been making bad decisions that is causing higher inflation in the UK. So definitely, if we get a drop in UK's labor data, that should definitely start causing a lot of fear into the markets. But if we do get a stronger print in labor, I think that would definitely cause strength for the pound currency because now we having strong labor and strong inflation. So hopefully, at this around 2 a.m., we should take advantage of some strength. I think that would be the best opportunity. Then at 5, we got Euro HICP, which is just Euro inflation. Typically, that type of data always ends up as expected. But if you guys want to watch it, so be it. Asian session, 9:30, we have Australia's labor data, which sometimes we do get some really good opportunities with that. I could go over some technicals afterwards, but New York session, 8:30 tomorrow. We got U.S. retail sales, which is a good indicator to focus on U.S. spending. And then we also have jobless claims, which we get every week. So not really much of a big deal. So if you guys have any questions so far, right, don't hesitate to ask whatever it is y'all guys want to talk about, right? So now I'll just go forward with AUD because at 9:30, right, we're going to get that AUD labor data. And it could set up for some good opportunities. I think I like the idea of AUD JPY. AUD USD, and I would say like pound AUD too, just in case. So you can see the expectations, right? So when it comes to this data tonight, what you want to pay attention to is employment, right? Unemployment, and those are the two hard data points. But everything, we want to see everything show either we're having a strong print or a weaker print, right? So that we get a strong labor print, AUD strength. We get a weaker labor print, AUD weakness. If it comes out as expected, just leave it alone. No edge. There's no clear opportunity, no edge. All right, just to make it extremely clear for you guys. So what I would like to see, right, I would like to see a weaker print across the board. But it's 50-50. It's labor data. So it could be any opportunity. I like the idea of AUD strength because last CPI came out higher than expected, right? So with a stronger labor print, that would just push the RBA into pausing rates as well for the next rate decision because they're not seeing downward revisions in inflation, right? So if we could see unemployment is what's going to be important. And we have to see this come at a 4%. And then employment, if we could get that above a 45, That's what's really going to be a no-brainer for AUD strength. Okay, if we see that unemployment is at a 4%, and then employment data is above a 45, that would be a no-brainer. And obviously, if we get full-time employment, just going above that 38 would be ideal. If we want weakness, right? Unemployment has to be above a 4.2. If we can hit a 4.2 or 4.3, I think that is good enough. But a no-brainer would be a 4.3. And then we need to see employment stay below a 10, which is going to be good for AUD weakness. That's what's going to be the no-brainer, okay? Now, when it comes to pairs, so if you guys are looking at AUD, because we got like an hour and a half before the data comes out. So obviously, like, price action could do whatever it wants. But just acting like just in case if the data comes out now, right? So if we get some strength coming in place, you're going to want to, if the data comes out higher than expected, we see some strong labor data, we're going to want to see AUD JPY breaking above this resistance of 96,650. And that's where you're going to start looking for your buy opportunity to see if we get that nice price action, that nice push to the upside, most likely hitting around 96,900 if we get a surprise beat. If we get a miss in data, you want to see it break below this area of support because we're breaking out of the range. As price is breaking below 96,300, you're going to want to see a good target around 96.0 flat if we get a complete miss across the board. All right, so I would say that would be the opportunity, paying attention to if you're looking at AUD JPY. Now, like the dollar, right, like Aussie dollar, the situation is going to be really dependent on what the dollar does, right? I still like the idea of dollar buys. So with AUD USD, I would like to take advantage of I think a miss would probably be the best bet, because if you get a miss, it would probably signal for AUD USD sells, because I want to see dollar strength take over, because the only reason why we saw the dollar weakness was only from Trump threatening to fire Powell. But other than that, we've been seeing a stronger dollar because of what happened with inflation earlier this week, right? So we probably going to see continuations of that dollar strength. So even though like price is still pushing lower, like these are the areas of interest, like moving forward. If we get a weaker print, you're just going to want to be able to start taking advantage of those sells, at least coming down to the support area if we get a miss in CPI. All right. So I would think that would be the best bet. Like AUD JPY could be neutral, but I think the best bet for AUD USD would be if we get a miss. And now the reason why I said about pound dollar, right? Pound Aussie, because we already had a strong pound, strong inflation for the United Kingdom. So with pound AUD, the best bet will be a miss also, right? So I would be looking for a buy if we get a weaker print across the board. And ideally, we already breaking above structure, but it depends on where we are in price action in the next hour. But if we are already at this high, right, and once we get a weaker print, this is the direction you're going to want to take advantage of pound AUD if labor data ends up as a big miss, okay? Obviously, the markets can move in both directions, but you just want to take advantage of the clearest edge. If you get a miss, focus on pairs, on the divergence of the pairs, a stronger currency against a weaker currency, or, you want to take a weaker currency against a stronger currency. So you don't have to deal with trading in consolidation. All right. So now looking at gold, because I do like the sells. I was in sells earlier too when the headlines came out, but I just closed. Didn't want to stay in the range. I still thought it was 50-50 at that point. But heading towards 9 p.m., we could possibly start, especially if dollar starts gaining strength. I don't really see any other reason right now for dollar not to gain strength, but we could possibly see consolidation because of today. Only because like we did have higher inflation and then today we got weaker inflation. It could cause indecision. But it already shows that the markets has made its mind, that they're still expecting a pause, which should still continue give us dollar strength. If that does happen, I would say like I wouldn't want to take the sells here just yet, but you could get a nice scalp right there, breaking below 33.40 to 33.34. But ideally, probably waiting until like 9 p.m. after 9 p.m. to see if we could get some good opportunities on those gold sells, right? That would be the best bet for a really good scalp, especially if the dollar and the yields continue to gain its strength. But after 9 p.m., if we still seeing price action to fail to break lower, and then once we see gold breaking above 33.56, that would probably be the good scalp opportunity to the upside. I would say around a good target could be around 33.65, depending on what happens after London session. All right, guys. When it comes to equities now, like overall, I still have a bullish bias. I don't like the if you took buys on equities today, I think that was the best bet. Like US 30 from the lows, NASDAQ from the lows, because there's nothing really going on in the markets that is signaling that we should be looking for sells. There's nothing that's really going on, right? But trading it over Asian session in London, it's kind of slow price action. So when we go live tomorrow, that's what we look for. We'll look for opportunities, but it's good to let equities push lower because you don't want to be buying from the highs, but let it set up for better buy positions, right? I think US 30 is at really good structure. NASDAQ, I wouldn't want to buy up here, but US 30 is really good price action. If we could get another push to that support, that like 43,800, that would probably be a good area of interest to focus on if we could continue those buys, right? Because there's nothing really going on that is signaling that we should be looking for sells in equities, right? Other than a short-term perspective, then looking at additional buys later on, longer term. All right, guys. So I will see you guys at 2 for, I'll see you guys at 2 for labor data for the UK. All right, guys. So if you have any questions, like right now is a good time. If you're good, just put a 1 in the chat. And you can hit me up on Instagram if you guys have any questions or concerns. I'll get a few minutes to see if you guys have some questions. Nah, I have to get some sleep for 2 a.m., man. Yeah, that's why I went over the trade ideas for it, but I'm going to be up for 2 a.m. I have to get some sleep. Yeah, after this, I'm going to knock out. All right, guys. Later. Peace.